everyone, and welcome to the Blockchain Improving Margins, Visibility, and Transparency Throughout the Supply Chain panel. We've got a bunch of a very interesting panel today where we're going to be talking about the use cases of blockchain, specifically in the African context for supply chain. My name is Nathan Williams. I'll be the moderator for the panel today. I'm the founder and CEO of Minespider, and we do supply chain transparency with blockchain. Joining me today, we've got Anzill Adams, founder and CEO of DataLedger, Michael Awori, the Deputy CEO and Chief Operating Officer for Eastern and Southern African Trade and Development Bank. We've got Gerhard Dinhof, Senior Architect and Blockchain Country Lead for IBM South Africa, and Sabrina Tachdjian, Head of Fintech and Payments at the HBAR Foundation. Thank you, everyone, for joining me today. Before we begin our session, I would ask each of you to just introduce yourselves and the foundation and what you're working on. Can we start, please, with Sabrina?
Sure. Great to be here. Thanks for having me. I lead the Fintech vertical at the HBAR Foundation. The mission of the foundation is to support and stimulate the development of the Hedera Hashgraph ecosystem. So maybe a quick word about Hedera Hashgraph. It's an enterprise-ready public permission DLT, and it happens to have a number of deployments in the supply chain and integrity space, data integrity space. Hedera is not a typical entity. It's actually run by a governing council made up of a large number of companies spanning different industries. And so, for example, on the IT side, we have Google, IBM, Wipro, and they may be interested in solving supply chain problems from a technology. We also have banking institutions like DBS, Standard Bank, or Shinhan Bank, who may have some exposure to like the financial aspect of things like, for example, trade finance. And then we also have manufacturers like LG Electronics, so Boeing or Avery Dennison, who may be the end users of a DLT-based solution for supply chain. So I hope that provides some context.
Thank you very much. Michael, could we continue with you?
Sure. Thank you. Thank you, Nathan. It's a pleasure to join, and greetings to the rest of the esteemed panel. So Michael Awori, Deputy CEO of Trade and Development Bank. We are a regional development bank active across East and Southern Africa, 22 countries stretching from Egypt all the way down to Swaziland, as well as the Indian Ocean islands of Mauritius, Madagascar, Seychelles, Comoros. So we specialize in project finance, where we do everything there from corporate finance to sort of project infrastructure finance, as well as trade finance, sort of pure vanilla trade finance transactions, all the way to structured trade, and certainly supplier finance falls in there as well. We're part of the TDB group, which includes a few new young entities. We have Academy, we have the Trade Development Fund, which is our concessional window, as well as a few other specialized and early stage developments in the group, I would say. And maybe at this onset, I'll just ask everyone to sort of dumb it down for me. Definitely not the techie on the panel, but really going to be approaching things from very much from a sort of a banking sort of perspective. Yeah, happy to be here again. So thanks, Nathan.
We're very happy to have you. Maybe Anzill, could you continue?
Thank you, Nathan. Thank you for the opportunity to be on this panel with you guys. Certainly a bunch of esteemed people, and I'm looking forward to learning from all of you. I'm the founder and CEO of DataLedger, a business that was really started about 3 months before COVID started in 2020. We are a blockchain business development and advisory and then skills development business that designs, develops, implements, and supports blockchain infrastructures and platforms that enables decentralized applications for rapid deployment, across the supply chain. 50% of our company is owned by an Australian blockchain development business called Smart Trade Networks, and their purpose is to work with Queensland University of Technology and use their R&D. And what we do on the African continent is that we commercialize that. So our role is to find the projects, to design solutions, to develop a proof of concept, all the way through to deploying it, whether it's on the cloud or on-premise. The team has some serious expertise across multiple continents. It includes Africa, Europe, Australia, and Asia, in particular China. So our focus is largely on the agri supply chain. We've done some work in the wine industry in South Africa. The Australians has worked with us on the cattle industry, and in South Africa and Africa, you may know that livestock identification traceability system is a big thing to deal with illnesses and also to ready businesses for exports overseas in particular. We're looking at the halal value chain. Africa is a massive opportunity for halal products. And then we've currently very exciting stuff we've been doing with the CSIR in terms of developing a sandbox that can be distributed for the digitization of supply chains amongst emerging black farmers. So yeah, I'm really looking forward to learn from you and to participate. So I'm looking forward to this. Thanks very much.
Thank you very much. And Gerhard, could you tell us about a little bit about the work that IBM is doing and that you're doing in blockchain in Africa?
Happy to do so. Happy Friday to everyone. I'm delighted to be here. Yeah, Gerhard, techie by heart. As already mentioned, architect, developer. Wearing two hats today, actually. So one for obviously IBM, my employer, but on the other hand, also quite involved in the works of the HyperLedger Foundation and various projects there, also leading some meetup groups. Yeah, I mean, I have like 5+ years of hands-on experience to solve like real-world projects with blockchain technology and various industries that we have touched on, from finance, insurance, all the way down to supply chain, government, rollout of digital identity, certainly a topic that also touches the issues or the challenges in global trade in general. There are a couple of like lighthouse projects out there where IBM was certainly involved, but again, I want to remain neutral. So one is a collaboration with Maersk, TradeLens. We perhaps touch on that later, to put the global container shipping traffic on a blockchain-based system. Food Trust to get more transparency in the supply chain of goods that get consumed by customers. So it's a quite diverse field. And I fundamentally believe that with technology, we can, and especially with blockchain technology, we can certainly use it for good and to uplift communities, to democratize access to data, to the global trade ecosystem, and so on and so forth. So it's something that hopefully makes the world a more equal place. So that's why I'm here today and looking forward to.
Thank you very much. I'd like to kick off our conversation with the topic of transparency. So transparency is something that everyone talks about and is interested in, of trying to move away from sort of the dark areas of supply chain and some of the negative incidents that happen. Where do you guys see the most benefit to come from transparency, and what sort of hindrances or challenges do you see in getting transparency at scale? Look,
when we talk about transparency, I mean, we can unpack that from various angles. So on the one side, obviously there is the end consumer, especially the younger generation, who demands actually more visibility of, I don't know, where their products came from. Are they ethically sourced? Are the producers fairly paid, and so on and so forth. So I would argue that from that perspective, there's certainly a need in the market, right? Challenges.
Do you think that the companies are ready for transparency, though? Like we've heard, for example, past couple of years, A lot of excitement around investing in blockchain for transparency, for better visibility into supply chains. But do you think companies are ready to do it at more than just a sort of token scale at this point?
I think I just wanted to add on what Gerhard has been saying. I think that the world has moved away from businesses making decisions on their own in terms of how and where they want to do business. One of the big plus points that came out of this Ukrainian war is how the consumer actually forced McDonald's and Starbucks to remove themselves from Russia. So I think what's happening more and more is that the consumer is demonstrating their power, and I think it's very good for them to do so. They want to know where what they are consuming is coming from, and I think businesses are no longer going to have, and shareholders are no longer going to have the say, on that. I have a 20-year-old daughter that when she wants to buy a pair of Takis, right, like all her friends, and she's a Generation Z member, is that they go on so many different websites to first of all see whether the techie was produced by somebody that looked after their labor, where it's coming from, many different opinions, and if there's a certain negativity about it, they just move on to the next product. And so I think the new consumer is the new influencer of the world, these younger kids, and so people are no longer going to be able to tokenize transparency. It's a fact, and it's here to stay. And I think blockchain is the timing for blockchain to enable it is perfect.
I think that's a great point. Like, you really hit the nail right on the head with the consumers really driving that demand for transparency. If we had to kind of break down from a more enterprise standpoint, who's benefiting from transparency and who is not. So, for example, more like classic intermediaries will not benefit from increased transparency. They want to protect their margins. They want to protect their role as a middleman. But if you see, for example, so if I take the example of a manufacturer, say a aircraft manufacturer, handing out contracts to tier one contractor, that tier one contractor will almost immediately outsource that to a tier two contractor. No one really knows where the margins are, and the manufacturer may be overpaying, may not have very good visibility into the quality of the parts. So yeah, this is an example among many, but I think the key here is a disintermediation, and the flow of both data and value. Really, I think this is the value for DLT here.
I also think, Nathan, if the EU had known, or if consumers in the EU have known that the EU is paying Putin $275 million a day in terms of consuming the oil, and then that money goes towards financing the war. Consumers may have made an effort probably a year ago, or in 2014 when they took over the Crimea. And so I think the power of the consumer, more than anything else, is now being sort of elevated when one starts analyzing this war between Russia and the Ukraine. It's perfect, it's wonderful, that consumers have that power and start realizing the power. And this technology is really feeding into that and can, through disintermediation, create new ways of sustainable economic empowerment, which is really exciting to look forward to.
From a financial point of view, I'm curious as to, Michael, what your view on this is. Because we often talk about transparency in terms of the downstream, in terms of consumers, or in terms of big business that has a brand that they want to protect, or that they want to know for importing finished goods to a consumer market. But what about for, in the African context, for suppliers, for raw materials, for communities, or for financial providers? What do you think the mood is on transparency from that perspective?
Mm-hmm. Thanks, Nathan. I think I'd answer that sort of from our perspective as TDB, where we have been, I'd say, sort of early adopters of technology and of blockchain, specifically in our trade finance business. primarily on the importing side. So financing and supporting trade associated with the importing various commodities into our region, and now looking at expanding that on the exporting side. But I'd say from that experience, certainly the benefits of blockchain in terms of the increased transparency really, I think, goes down to the traceability, to sort of really being able to have that visibility into where products are coming from, and having the comfort of that sort of being, that single source of truth verified via the blockchain, which can then facilitate things like, KYC and sanctions checks, et cetera, right? Sort of having, again, that security in terms of the source of the various products. I think that's been an area that's been quite important from a financial perspective, given the importance of compliance in this day and age, which is only increasing. But I'd say also for our clients as well, it really does matter, right? Again, that traceability back to the source, particularly with our clients where they may be aggregating a number of different inputs, right? And where, one input perhaps could be contaminated for whatever reason. But being able to have that line of sight and be able to, identify and segregate what may be contaminated can have very direct impact on margins, right? You can then isolate a particular product as opposed to perhaps having to throw out, a whole harvest, for example. So I think there's very direct sort of impacts and benefits to us as the financing end of the segment, but we're really seeing that flow through as well to our clients in a number of different areas.
This is a fascinating segue into sort of the next big topic, which is when you talk about being an early adopter of blockchain technology. I think a lot of us have seen proofs of concept even at a production scale, but we're still sort of in the early phases before the mass adoption. It's the pioneers and maybe the early majority that we're trying to get to at this point in terms of adoption, because the majority of the market still is untraced. What do you think the primary incentives would be for big business to go into that early majority of blockchain traceability and adoption? And what sort of barriers do you all see for making that transition? Maybe this time we'll start with Anzill.
Yep, thank you very much. About a year ago, I collaborated on a position paper on the adoption and application of blockchain in South Africa. And we looked at 13 different businesses in South Africa. And we did a analysis of this. And the industries range from agriculture, healthcare, finance, all the way through. And what we found was that, a lot of these projects didn't venture beyond proof of concepts. And we found that the reason for that was multitude. One, people didn't have the skills to venture beyond the proof of concept, so they were very eager to look at that. Corporate culture did not encourage change management in the organization. And then there was some substantial fear, amongst people in terms of these changes that they didn't know how to engage and move forward with. We have, as I mentioned, we've developed a proof of concept for the South African wine industry that, by all intents and purposes, currently is not really a viable industry and needs to look at different ways and means of how it can position itself globally. And we've developed this proof of concept with one of the most successful wineries in the country. And, the idea of change management, the concept of change has been a very difficult thing for people to understand. And so when you do understand that, blockchain can elevate people's positioning of the products, especially if you start looking at wine as a non-fungible token, and position it in terms of the communication with this, Generation Z and the millennials and how they communicate online, in particular, from a South African perspective, and the Chinese link, where the Chinese have moved to the blockchain service network and how they've dealt with Australia. These are massive opportunities, and people understand that, but they just don't have the know-how. They're scared, as I mentioned, and then because of that, they don't know how to also invest in these opportunities. So what we've then concluded was that, from an adoption application perspective, whilst it's going to be driven by the regulatory frameworks in the market, you also have to introduce training as a big driver for adoption and application of this technology. Start just talking about this in a less complicated way. Blockchain is a very, very complicated technology to talk to people with to begin with.
Can only second that. I would even argue not necessarily everyone needs to be fully aware of the capabilities of blockchain and all the technical nitty-gritty details. I mean, just gave the example before we started this conversation, but I mean, very few people are actually aware of how a car engine works and are still able to drive a car. So why is it different with blockchain? Why does everyone need to become a blockchain expert? I mean, everyone of us who went down the rabbit hole, I mean, we are all fascinated and biased, but on the other hand, businesses have their core competencies to focus on, and we should be there to support them. And one thing I want to second, yes, POCs are often like very technology focused, right? We want to prove that blockchain works and we can still integrate our legacy systems, blah, blah, blah. But when it comes to like putting it into a production state, apart from all the technical hurdles, it's often the classical things around, who is actually governing the platform? I mean, blockchain is a team sport after all. What's the business value? How to make it like sustainable from a business perspective? I mean, nobody implements blockchain and then doesn't gain any value out of it from a financial perspective. So that's very important too, besides the technical parts.
Yeah, if I could maybe just pick up right from there with Gerhard and Anzill, both made, I think, really, really important points. And going back to sort of our experience and why we were early adopters, I think 2 points came out, particularly from Anzill in terms of the know-how, right? But I think really for us, it was around sort of the why, right? I think you have to be sort of, our approach at least was around a client need, right? A client came to us with a problem, suggested this as a solution to a specific problem, right? So there was a very defined why we should look at this, right? And there was real money involved in terms of this being a potential solution to the problem, saving the client money, and adding to a new revenue stream for the bank, right? So that's kind of really the guts of why we sort of focused on it. And as I said, I'm not a techie. I can't, start getting into NFTs. I don't have the right applications up here to sort of understand any of that stuff, right? But I can understand a client has a problem, right? As a service provider, as a bank, my role is to help them solve that problem, and in doing so, create and capture value, right? And like I think you said at the outset, the technology is there, it exists, all of that stuff exists. But I think sort of approaching it with that mindset, and then that helps unlock some of the other problems like the know-how, right? So, understanding how technically the blockchain works and how everything will fit together, et cetera. You can sort of solve for that in a sort of viewing as a journey to sort of, on a sequential basis, knock out little bits and pieces here and there, but focusing on delivering value, solving a problem as a number one driver, at least from our perspective, that was really important to focus on.
Yeah.
Could I jump in and just ask then, has blockchain's maturity, has the maturity of the technology gotten to the point where people don't have to think as much about it anymore? And do we lose anything from that? Like, for example, historically, the mantra of the blockchain community was don't trust, verify. And that means that essentially people have to have more knowledge because they're in control of their data, they're in control of their money, they're in control without an intermediary. But the trade-off for that is that they have to have the knowledge to be able to use that. Do we lose anything by making it simpler? And is that the path that everything has to go? And does that trend toward more centralized approach? Maybe Sabrina, we can start with you.
Yeah, I mean, I'm a big fan of user friendliness, generally speaking. I do get the original sentiment by the blockchain community, which is the importance of having custody and real ownership of your own assets. That's one of the key tenets. At the same time, it shouldn't be so difficult to the point where it's akin to your assets are like, having custody of your assets or managing it is akin to having stashing your cash under your mattress, right? And what happens if your house burns down? So I believe there are ways to make it easier for people to, for example, manage their private keys without having to, write it down on a piece of paper or putting it on their computer where it might get hacked. That's just an example. I think maybe to also add to what Gerhard was saying earlier about, you don't necessarily need to know how to drive, how your car engine works to drive your car. I'll play devil's advocate here because there's still the technology is maturing. Blockchain, some layer 2 solutions are making it faster, cheaper. Other DLT solutions like other private networks are already scaled. Our technology and our hash graph is not a blockchain, so also very fast and low fee. So with that, we're able to do a lot of enterprise developments. But I feel still overall there is not enough tools, not enough building blocks for developers to just take a few modules and put something together quickly. That's why with blockchain, you kind of have to be a mechanic and go open the hood and still know what's going on and how it works. Now we made some choices, for example, to support languages that are fairly common, like JavaScript, so that to make the learning curve easier. But still, overall, I think the sector, while the technology is maturing, there's still not enough building blocks, and so that's an area that I'm quite passionate about.
I think, Nathan, also what I've learned over the last 2 years when it comes to driving the maturity of blockchain is to really sell the problem that we solve and not the product. Don't sell blockchain. Sell the problem that you solve. Not there. Because that makes it infinitely easier. And that brings me to the point that Michael, you were saying you're not a techie. In fact, what we do need is more people like you that are brazenly admitting that they don't understand how the technology works, because we don't want everybody to understand the technology, how it works. We want people to sell the problem that this technology solves, and that will drive, I think, broader adoption and application of this technology. We started at the wrong end. It often starts with the techies, and they develop these solutions in isolation. And we need people on the ground to say, well, we can contextualize the reality for you and work with you in terms of solving selling this problem we need to solve. That's for me is the key thing. Selling.
Has the problem changed though? This is the question, right? Because the 2000, just contextualizing, 2008 with Satoshi, the problem was the double spend problem. And can we operate a financial system without an intermediary or a single centralized point being in charge? Is that still the problem today, or do we have a different problem that blockchain needs to address?
Yeah, if I can respond, in South Africa, we have a dual economy. We have a formal and an informal sector. The formal sector, particularly, is very global driven, very technology orientated, and very white owned. If you consider the history of South Africa. It's where most of us work. But the informal sector is traditionally black, very low skilled, have no tech orientation, but it's a consumerist environment, And if you consider how banks and all these big organizations are now all suddenly driving the adoption of blockchain because they want to remain relevant, because disintermediation, as Sabrina earlier mentioned, is a real socioeconomic empowerment tool, is something that we have to consider. And so it is an issue that, the banks and all these old, outdated entities are still trying to control processes. We need to move away from that. What we need to do is we need to understand that even in informal sectors, this technology can make a difference, and that it is probably better in those environments to take intermediaries out of the equation. So in informal sectors, you have huge amounts of people that are unbankable, underbanked, and unbanked. And you don't need banks to finance deals with them for them anymore. We understand this. We just now need to start to understand how we can execute this. And so while it's still a problem, it is informing us how to do things differently.
Mm-hmm. If I could maybe come in there. So I'm based in Nairobi. And if you drive around in different neighborhoods, it's quite common to see signs that say, "This land is not for sale." Right? Yeah. This property is not for sale. And when I moved back to Kenya, I'd been away from Kenya for a while, and when I first saw those signs, it was just what? Not what you typically expect, right? So if you drill down to understand sort of why is that, right? It's because, and this is I'm sure common in many of our countries, the institutions, for example, a land registry, are either they don't exist or they're ineffective, right? And so people don't have confidence in the ownership of these assets, right? But these assets exist. There's significant value in these assets that's trapped because you can't transact on them, because you don't have, again, that security in, are you dealing, if I'm trying to sell you a plot of land, do I actually own that land, right? Or could you be buying that land and then, 2 days on the road, somebody else shows up and they're the rightful owners. And I've had sort of secondhand experience with family members who have had that happen, right? And so I think, putting my developmental banker hat on, right, I view the blockchain, for example, in this instance, could be a way to use that technology to create an entirely new system. So not even be spending our limited public resources on digitizing registries, et cetera, but creating a whole new process with a whole new set of trust in that system, right? In a blockchain-based land registry system, right? Again, it's a quantum leap from what we have, but then now you've given people an ability to monetize their assets. Now you can have land being bought and sold, etc., and it's going directly, to the people who own the land. And so I think, again, to Anzill's problems, or to Anzill's sort of point earlier around finding ways to use the technology to solve practical problems, right? I think is how we can go about that.
It's interesting that when blockchain started, it was with a group of crypto anarchists who believed that that blockchain was the key to removing power from institutions, government institutions that may have gotten too strong and too corrupt. Whereas generally when I hear blockchain being talked about in an African context, it is the opposite. It's looking at ways to empower the strengthening of institutions to get rid of, also to get rid of corruption and inefficiencies there. And I'm wondering if that's the opinion or the observations of the panel as well. Maybe we can go to Gerhard. Thoughts on this observation?
That's actually a very good thought point. Look, I think we have to distinguish between the like you call them the crypto anarchist mindset of like a public open blockchain such as Bitcoin, and the more enterprise focused implementations that the panel is probably more familiar with. So I think that there are different aims to both of it, and I think when it comes to there's certainly this mindset of empowering the perhaps the producers, the farmers further down the supply chain, the value chain. But I believe first and foremost, it's more about making the whole process more efficient and to optimize the flow of goods and therefore to reduce overhead and to, after all, it's a more capitalist mindset, in my opinion, that I see when it comes to implementing solutions in enterprises.
Yeah, I just think we're tired, and we're tired of corruption and mismanagement. We want transparency. Why must Africa suffer the way it does? There is Michael, and perhaps you can confirm this, but there is an initiative to create one monetary unit for the entire Africa. And why can't it be a cryptocurrency? Why can't the African state stand together for once and relieve itself from, colonialist currencies like the dollar, the pound, the euro, for that matter? It's time that we, as an African continent, come together and realize our potential lies in unity. And this type of technology can drive it. A lot of the African continent residents and people who stay here operates in third world economic structures. It's unnecessary. It's time that we unify, because we're really tired of the way things are being mismanaged and the way we are being abused. So I see cryptocurrency as a sustainable way forward.
Absolutely. And a question to you, Anzill and Michael, isn't a lot of those issues that you talked about rooted in still having to deal in each and every part of our business and lives with piles of papers that can easily be tampered with, that get lost, that I believe that's where it all starts, and then we can talk about like leveraging on blockchain to solve the real issues. What's your thought?
Take that, Michael.
Yeah,
because you mentioned the land registries, for example, right?
Right.
So that's certainly.
Yeah, again, I think it's about, in my mind, it's about sort of, again, recognizing that in many of our countries, we don't have these institutions, right? Or they're inadequate, right? And that reality drives the lack of trust, right? In those institutions, and holds back our development in a number of different sectors, right? And so for me, I think the debate is, do we take the resources, do we take the time to try to build up these institutions that the developed world takes for granted, or would we be better served to leapfrog those entirely and take advantage of these new technologies to build new systems based on a different sort of trust, right? So, not the trust in, again, the government registry that's, got signed off by this chief and that chief, et cetera, but one that's built on, right, this consensus-driven, blockchain-backed system, right? And would that be more democratic? Would that be more efficient? And sort of akin to how the mobile phone revolution in Africa was responsible leaps and bounds for financial inclusion, right? Because then we could have, savings and investments and insurance all on your phone, right? So I think that's the angle that I'm really interested in pursuing. I think that's where, again, is a promising path for our development as a continent.
I agree.
And with that, I think that's a good thought to close on. We are out of time. Thank you very much to all the panelists who came to discuss. And I would just like to ask if anyone has a question. I saw there were questions in the Q&A. You can reach out to the panelists directly through the system or send an email. And thank you very much. And I hope everyone enjoys the rest of the conference.
Nice to meet you all.
Like
Great to learn from you. Thank you.